Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. Pacific on Sunday, October 15th, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's talk about that. Tonight, we're diving into some global moves that could reshape financial landscapes and throw into question the role of traditional currencies. From BRICS nations sidestepping the US dollar to Bitcoin's newfound role amidst the debasing of that dollar. We'll also discuss new financial instruments in the Ether space, leadership shifts at Tether, and how the crypto community is stepping up in times of crisis. Buckle up, it's going to be a packed night. But before you turn your compass toward Bitcoin, hit that like button and turn on notifications to keep up with our nightly episodes. The shift away from the US dollar in international trade, especially in the critical oil sector, underscores a financial evolution that could ripple through the global economic landscape. The BRICS nations, specifically China and India, have taken a substantial step in this direction by opting to ditch the US dollar in oil transactions. This decision is said to save these nations a whopping $17 billion. It is a clear maneuver to reduce dependency on the historically dominant currency in an environment where the balance of economic power is subtly shifting. On the flip side, despite these maneuvers, the US dollar showcased its robustness by outperforming all 11 BRICS currencies along with gold. This seemingly contradictory scenario paints a nuanced picture of the global economic theater. On one hand, there's a visible attempt to reduce dependency on the US dollar, echoing a broader sentiment among certain nations to diversify their financial engagements. On the other hand, the enduring strength of the US dollar against other currencies and gold underscores its entrenched position in the global economy. This move by China and India is not merely a bilateral arrangement. It reflects a larger narrative where nations are exploring alternatives to the US dollar, especially in trading commodities like oil that form the backbone of modern economies. The dollar's dominance has long been a staple of global trade, but the winds seem to be shifting, albeit slowly. This development is indicative of a larger trend. It could have significant implications for the cryptocurrency sector. As nations explore alternatives to traditional fiat currencies, the allure of decentralized digital assets may find a more pronounced resonance. The BRICS move hints at a growing appetite for financial autonomy. It's a subtle nod to diversifying monetary mechanisms. It may extend to digital currencies in the foreseeable future. However, it's essential to note the US dollar's resilience as it continues to outperform other currencies. This resilience reflects a level of trust and stability associated with the dollar, traits that cryptocurrencies aspire to embody. The contrasting dynamics between the BRICS move and the dollar's performance offer a fascinating glimpse into the evolving narrative of financial power and autonomy. It's a multidimensional chessboard where every move reverberates across the globe, potentially influencing the trajectory of cryptocurrencies and decentralized finance. The BRICS choice to sidestep the US dollar in oil trade is a significant move, albeit one among many in the complex realm of global finance. Yet, it's a signal, a hint at the turn in the established order, nudging the discourse a step closer toward broader financial diversification and possibly a subtle lean towards the decentralized promise held by cryptocurrencies. Now, you've heard how BRICS nations are looking for new horizons, but what happens when the lighthouse that's guided ships for decades starts to flicker? We're talking about the US dollar, and as it wanes, Bitcoin shines brighter on the radar. By the way, if you are finding this illuminating, don't forget to subscribe and hit that notification button. And this one's our cover story for tonight. As the economic landscape in the United States continues to change, the era of the dollar's dominance is seemingly nearing an end. Prominent voices in the financial sector have sounded the alarm, indicating a shift that could potentially alter the economic equilibrium globally. One such voice, legendary investor Jim Rogers, has made clear his stance on the dwindling stronghold of the US dollar. Rogers cautioned that the era of the dollar acting as the world's reserve currency is coming to a close. His warning encapsulates the growing concerns about the US government's fiscal strategies, which have been criticized for driving the economy towards a state of currency debasement. On the other side of the spectrum, Bitcoin, the pioneer of decentralized cryptocurrencies, stands to benefit from this impending debasement. The narrative that Bitcoin acts as a hedge against economic uncertainty is being reinforced by the unfolding scenario. Bloomberg's senior commodity strategist, Mike McGlone, echoed similar sentiments. positing that the US government is left with no option but to face currency debasement, giving Bitcoin a fertile ground to thrive. McGlone's analysis underlines the potential for Bitcoin to serve as a hedge, as the traditional financial structures exhibit signs of faltering. The situation is a glowing reflection of the systemic issues within the traditional financial frameworks governed by centralized authorities. In fact, any skepticism toward centralized financial systems is not unfounded. The government's control over monetary policies has often led to financial mismanagement, subsequently pushing the economy towards unfavorable conditions. The scenario unfolding in the US is a testament to the inherent flaws within centralized financial systems. The contrasting trajectory of Bitcoin amidst the declining fortune of the US dollar highlights a fundamental difference in the principles governing these financial entities. Bitcoin, with its decentralized nature, offers a level of financial sovereignty and resistance to inflationary pressures, attributes that are becoming increasingly appealing as the fear of currency debasement looms. This scenario paints a broader picture of the evolving economic dynamics, where decentralized cryptocurrencies like Bitcoin are positioning themselves as viable alternatives to traditional currencies. The narrative is a reflection of the changing attitudes towards traditional financial systems and the growing appeal of decentralized financial alternatives. As the US grapples with the potential consequences of currency debasement, the spotlight shines brighter on Bitcoin, showcasing its potential as a viable alternative in preserving wealth and promoting financial stability. This unfolding narrative underscores the significance of decentralized financial systems in the contemporary economic milieu, marking a noteworthy chapter in the ongoing saga of financial evolution. From the crumbling pillars of the dollar to new building blocks in the Ether space, next we turn to ProShares' novel Ether ETF, a tool that could make or break your crypto portfolio depending on Ether's tides. Now, while you ponder that, take a moment to follow us. We've got more insights coming your way every night. The cryptocurrency market, specifically Ether, witnessed a new development with the introduction of a unique exchange-traded fund by ProShares, already a notable ETF provider. The ProShares Short Ether Strategy ETF, abbreviated as SETH, is crafted to provide an avenue for investors potentially to benefit from declines in Ether's price without directly shorting the asset. ProShares is no stranger to the cryptocurrency ETF space. Prior to this, the firm introduced 3 Ether futures ETFs, and the launch of SETH is seen as a diversification of its Ether-focused fund offerings. This new ETF is scheduled to be listed on the NYSE Arca exchange. It's structured to mirror the inverse of the daily performance of the S&P CME Ether Futures Index. The mechanics of this ETF are noteworthy. Unlike direct shorting, this fund aims to capitalize on the price dips of Ether in a manner that might be more cost-effective and accessible for investors, especially through traditional brokerage accounts. This ETF is designed such that its value increases when Ether's price drops, a feature that might appeal to investors with a bearish outlook on this particular cryptocurrency or those seeking to hedge against potential declines. The timing of this launch comes on the heels of a notable price dip in Ether, which stood at around $1,540. Marking a roughly 6% decrease over the preceding week. ProShares plans to introduce the fund to the market in early November. Now, it's important to reflect on the broader implications of such financial products in the crypto space. This move by ProShares can be seen as a response to the growing demand for digital asset exposure among institutional clients, an indication of the evolving dynamics and acceptance of cryptocurrencies in the traditional finance realm. Furthermore, introducing such ETFs provides additional tools for investors and traders to navigate the volatile cryptocurrency market, particularly Ethereum's market. It also underscores the maturing landscape of cryptocurrency-linked financial products as traditional financial entities continue to weave cryptocurrencies into their offerings. The launch of this ETF is part of a broader trend where traditional finance and cryptocurrencies continue to intertwine, offering a myriad of investment strategies in the growing digital asset landscape. The ProShares Short Ether Strategy ETF is indeed a testament to the ongoing fusion of conventional finance mechanisms with the crypto economy, a trend that's progressively reshaping the financial ecosystem. ProShares is diversifying, and so too is Tether, with a new captain at the helm. Leadership changes like these could set a new course for the whole crypto fleet. If you're enjoying the voyage so far, like and subscribe for daily updates. Tether, renowned as the issuer of the dominant stablecoin USDT, ushered in a new phase with the appointment of Paolo Ardoino as its chief executive officer. This transition is slated to become effective from December 2023, marking a pivotal step in the stablecoin issuer's journey. Ardoino is not a new face to the Tether community. He's been serving as the chief technology officer since 2017. His promotion to the CEO's chair is seen as a natural progression given his extensive engagement with the community, often representing Tether to both the public and the media. His profound commitment to transparency, security, and financial integration of digital assets has been a cornerstone of Tether's ethos, making him a fitting choice for this critical role. The outgoing CEO, Jean-Louis van der Velde, is not bidding adieu to Tether, but transitioning to an advisory role, ensuring his expertise continues to benefit the company. He will also retain his position as the CEO of Bitfinex, a cryptocurrency exchange closely related to Tether. The management reshuffle at Tether is not merely a change of guard, but a strategic move aimed at steering the company towards new horizons. As van der Velde expressed, Ardoino's appointment is a leap into an exciting new era for Tether, hinting at an ambitious new roadmap ahead. Besides his new role at Tether, Ardoino will continue to wear his technical hat as the CTO of Bitfinex and Chief Strategy Officer for HolePunch, a Bitcoin Layer 2 project funded by Tether and Bitfinex. These duties position Ardoino as a key figure in guiding Tether through its future endeavors, especially as it eyes dominance in the space across Europe. Despite past controversies surrounding USDT's backing, Tether's market dominance stands unscathed, boasting a colossal market capitalization of $83.5 billion, making USDT the largest stablecoin in the market, followed by USDC with a market cap of $25 billion. The stability and trust in USDT reflect the robust foundation that Tether has laid down over the years. And with Ardoino at the helm, the journey towards achieving greater milestones in the realm of digital finance continues unabated. Ardoino's ascension to the CEO role heralds a promising chapter for Tether. His extensive experience, as well as his deep-rooted association with Tether and Bitfinex, are assets that bode well for Tether's future growth. As the stablecoin market continues to grow and evolve, the leadership transition at Tether is a significant event, signaling the company's preparedness to navigate this complex and evolving landscape of digital finance. Navigating from corporate seas to war-torn shores, let's discuss how crypto is making waves in humanitarian aid in Israel. If you're inspired by the transformative power of blockchain, take a second to like and share this episode. The ongoing war between Israel and Hamas has been a horror. It has impacted countless lives and instilled a sense of urgency within the global community to provide much-needed humanitarian aid. The crypto community in Israel has risen to the occasion, showcasing the transformative potential of blockchain technology and digital currencies in facilitating timely, transparent, and accountable humanitarian assistance. Led by the initiative named Crypto Aid Israel, a collaborative endeavor has been put forth to alleviate the suffering of Israeli citizens affected by the ongoing conflict. This initiative revolves around a multi-sig wallet, jointly controlled by various parties, that accepts donations denominated in multiple cryptocurrencies such as Bitcoin, Ether, and dollar-pegged stablecoins like Tether and USDC. Remarkably, Israeli banks and regulators have broken traditional barriers to facilitate the flow of crypto donations, acting as conduits to transition crypto assets to banks, thereby enhancing the efficiency of this humanitarian endeavor. The security and management of these crypto assets are paramount to ensure that the aid reaches those in dire need. Fireblocks, a crypto custody firm, took the lead in this regard. A policy has been implemented requiring at least 4 out of 7 signatories to approve the movement of funds from the wallet, thus ensuring transparency and accountability. Alongside Fireblocks, other key players in the crypto community like Market Across, Collider Ventures, Crypto Jungle, and the Israel Blockchain Association have been instrumental in this collaborative effort. The backdrop to this crypto-fueled humanitarian response is grim. The devastating series of attacks by Hamas killed an estimated 1,200 people and wounded at least 2,700 others. In retaliation, Israeli warplanes bombarded Gaza, leading to the reported death of 900 individuals and injuring 4,500 more. Amid this crisis, the Crypto Aid Israel initiative emerged as a beacon of hope, uniting local crypto industry figures and companies such as Fireblocks, 42 Studio, Market Across, and Crypto Jungle. Teaming up with nonprofit organizations, they have strived to receive and deliver humanitarian aid to affected Israeli communities using cryptocurrencies. This initiative is a testament to the adaptive and altruistic capabilities inherent within the crypto community. It underscores the potential of decentralized financial mechanisms in providing rapid, transparent, and accountable solutions in times of crisis. The global resonance and the unity displayed by the crypto community in Israel reflect a broader potential for digital currencies and blockchain technology in humanitarian aid domains, providing a glimpse into the future where digital assets could play a pivotal role in alleviating human suffering during times of unrest. The Crypto Aid Israel initiative goes beyond more than financial aid. It represents a confluence of technological innovation and human empathy, acting as a bridge of hope amidst a landscape scarred by conflict. The seamless collaboration between crypto entities, banks, and regulators to facilitate humanitarian aid in a time-sensitive manner is a bold step forward, signaling a paradigm shift in how humanitarian aid can be orchestrated in a modern era where digital assets become instrumental in fostering hope and resilience. From aiding crises to facing one, MetaMask encountered rough waters at the Apple Store, spotlighting the friction between crypto and big tech. Before we dive into that, remember to subscribe for the nightly episodes that keep you ahead of the curve. MetaMask recently experienced a hiccup where it was momentarily removed from the Apple Store, only to be reinstated shortly after. This event highlights the uneasy relationship between decentralized applications and mainstream tech platforms, a narrative all too familiar by now. Initially, users found that MetaMask was no longer available for download on the Apple Store. This removal sent ripples through the crypto community, as MetaMask is a crucial bridge for many to access decentralized applications. It was not long before the outcry echoed across social media platforms, raising concerns about the ongoing tension between crypto enthusiasts and big tech corporations. This temporary removal brought to light the delicate, sometimes contentious relationship between the decentralized crypto world and centralized tech giants. As gatekeepers of app distribution, platforms like the Apple Store possess significant control over what applications users can easily access on their devices. This power dynamic is something that does not sit well with many in the crypto community. Fortunately, the removal was short-lived. MetaMask was promptly reinstated on the Apple Store, allowing users to once again download and use the app. The exact reason behind the temporary removal remains somewhat murky, but what is clear is that incidents like these underline the broader struggle between decentralized technologies and centralized control. So, what happened? First up, BRICS nations, specifically China and India, are bypassing the US dollar in oil trades, signaling a tilt towards financial autonomy. Meanwhile, the dollar holds strong, showing its resilience and complicating the narrative. Next, as the US dollar faces potential debasement, Bitcoin is positioned as a hedge. Analysts and financial gurus alike see this as a turning point for the original cryptocurrency. We also talked about ProShares' new Ether ETF, designed to capitalize on Ether's price dips. This financial instrument adds a new layer to the evolving crypto investment landscape. Tether has a new CEO. Paolo Ardoino, promoted from CTO, is expected to lead the company into its next phase, as Tether continues to dominate the stablecoin market. In Israel, the crypto community is leveraging blockchain for humanitarian aid amid the conflict. With the involvement of multiple parties, crypto is proving its mettle in urgent, real-world applications. Finally, MetaMask got a brief timeout on the Apple Store, spotlighting the ongoing tension between centralized tech platforms and the crypto world. The app is back, but the incident serves as a sobering reminder of the power dynamics at play. Tonight's episode peels back the layers of a complex world on the brink of transformation. Whether it's the BRICS nations challenging the status quo or Bitcoin emerging as a hedge against the unstable dollar, change is afoot. The introduction of new financial tools like Ether ETFs and leadership changes in key crypto organizations like Tether are signs of a maturing market. Amid all this, the crypto community's role in humanitarian crises and its struggles with centralized platforms like the Apple Store underline the technology's broadening impact and the challenges it faces. In a world where financial strategies and technologies are rapidly evolving, these stories serve as waypoints on the road to a future where decentralized currencies and financial freedom could become the norm. As we close tonight's episode, remember that in this shifting landscape, staying informed is your best strategy. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.